Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of the Chicago soybean complex. I'll start with Chicago soybeans themselves. Beans in the teens and still holding. The weekly bearish shooting star pattern, type 1, bearish that formed 2 weeks ago, was the apex of the market. The subsequent gapping move lower continued until it started entering once again from the top side the original now broken bull channel, currently 1409 to 1498. We did have a gap from May 2014 between 1459 and 1467, but I don't think that influenced the slowing down of the decline. Rather, it was three factors fairly close together, one of which seems to have finally halted the fall and actually started a small move back up. They were the rising short medium moving average, currently at 1474, the broken and yet to be reassigned August 2020 to date uptrend, currently at 1490, plus most importantly the rising medium moving average, currently at 1436. This last one was not breached nor broken, and the market studiously avoided testing it before moving back up. Just in case, further below is the lower bull channel line, of course, currently at 1409, but this was a little too far to be of influence. Since then, prices have pulled back up a bit towards the gap left over from 1539 to 1577, a big large gap now. But given today's performance so far, seemingly studiously avoiding filling it in. Halting up here would tie in with something I spoke about some 2 weeks ago and repeated last week as well. Whilst there was no immediate pattern evident in the recent action, there was still a possibility of a bearish bump and run reversal top formed throughout 2021 so far. I qualified this by adding, and I quote, "But it is early as yet on this idea. I would very much depend on the market reaching the lower bull channel and what it did once it managed to get there, if at all." End of quote. Now, the market did not reach the broken lower bull channel line, nor did we see, as I mentioned last week, and I quote, "We might just see the nascent pullback we seem to be developing here, now possibly halting in the region of the broken upper bull channel line." End of quote. So, neither of these things happened. So why am I still talking about this bearish bump and run reversal pattern? Well, it very much depends on the recent action, the indecisive spinning top either side of the last weekend. Even if they drove the market higher, and today's action of the market seemingly being reluctant to push up over the 2014 high at 1522. The bearish bump and run reversal top still resonates with me, especially the hesitating way to pull back up has moved. I would suggest looking closely for one more week and seeing what the market says in the meantime. Chicago soybean meal. The move down 3 weeks ago, after reaching target X, was from almost the high of the year, and on its journey down made a new low for the year. This fatuous and somewhat banal statement is my way of saying that last month, that is May, was a monthly key reversal down. This may not seem important right now, as this is a pattern that needs to be seen on a monthly, quarterly, or even a yearly basis, but it deserves to be noted. The market started breaking from its descent during last week, when it dipped below the long moving average, currently at 393 even, and finally halted and turned back up upon approach to the combination below of the December 2020 low at 375.5 and the important 50% Fibonacci on the August 2020 to January 2021 move at 376.60. I'm not sure which of those is more important, as I suspect they worked in concert to turn prices back up. But the December low was there earlier, that I know. Anyway, this week's rise petered out on Monday as the market tried to reach up to the gently declining short medium moving average, currently at 411.40, the first piece of resistance overhead that wasn't connected to the previously highlighted congestion area above from March and April between 399 and 412 even. Well, it reached up but was swiftly batted down for shooting star pattern type 1 bearish. Interestingly, the follow-on lower yesterday halted at the rising long moving average. Thus it may be that we're now seeing the start of some basing action working off that long moving average. It is early as yet, but it would make sense. Finally, a repeat of my postscript from last week. You may have noticed I haven't drawn any bearish Andrews or shift pitchforks for the recent action throughout 2021. The reason is that neither would actually add anything and may just clutter up the picture. Though I have to admit the bearish shift pitchfork does have a little merit. We'll see. Chicago soybean oil. The mid-January to end of March bullish Andrews pitchfork once more continues to run this market despite its inauspicious start. The most recent effort has been a dip below the middle time, currently at 65.22, 2 weeks ago down to the 2011 high at 61 even, then moving sideways with gradually building indecision for a move up started on Monday, that's last Monday, pushed up and closed over the middle time yesterday in quite a grand manner. Originally, I thought last week that this action might be a build-up to a bear flag. Instead, we have enough data points now to draw a new, more acute bullish Andrews pitchfork with a late March to mid-May action. The market is currently in between the lower time, currently at 63.37, and the middle time above, currently 68.71. Thus, we have ample room to try higher, even to the original bullish Andrews pitchfork upper time, currently at 70.67. So today we have tried higher, but seem to have run into a bit of a problem overhead, namely the July 2008 high, yes that one, at 68.12. This was the level that halted the original move higher back in May, along with fulfilling the measured move higher from the start of 2021 which I'd set here. Anyway, it's being a bit of an obstacle today. Now on its own it may be nothing, but if taken together with the May high, well, then you have a possible double top. It's a bit early to know for sure, but it is worth watching out for. Finally, I'd just like to remind you of one piece of commentary from 2 weeks ago, which I revisited last week, and I quote, "Now this move lower since last Friday doesn't mean the market isn't still bullish. Of course it is. It is still in between the middle and upper times of the same bullish Andrews pitchfork. But a period of reflection here and maybe looking to see what pattern or action is to come next would be a reasonable idea." End of quote. We are still in between the middle and upper times, and the point I'd like to make, which is emphasized in a little bit there, is that this market is still within this 2021 based bullish Andrews pitchfork, and this market will continue to be bullish until it exits this pattern. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.